How you doing, guys? Eric from LittleWasteland.com. I don't even know what this video is going to be called, so it's probably going to be a bit of a ramble, so bear with me on that. I'm sure I'll get some cool title about how the end of the world is nigh. Get my own little daily, not even close to daily dose of doom and gloom, as Canadian Prepper says. But I want to talk specifically about housing and real estate. I'm not a housing and real estate expert, but I have been pretty good at predicting the overall trends of the economy. And there's the interesting thing about real estate right now is there's a lot of people who don't seem to be able to agree on what's going to happen over the next few years because of what they perceive as being like competing forces, but I don't think they really realize to what extent these things are actually in play. So if you guys recall, I managed to buy my house at, not the perfect time. The perfect time would have been a few years earlier when the prices were really low, but I nailed the 2.5% interest rate, which is like a joke. I would have borrowed $10 million at that amount if they would have let me. In this environment, it's like free money, and especially when you're getting a physical asset for it. And fixed rate, obviously, you'd be maniac to go with a variable rate in this environment. Anyone who has that is getting absolutely crushed. And since then, the value of the on paper value of the house has gone up by like 30%. So pretty wild. Now, I was expecting the correction in prices to come down a lot sooner. I did not expect to have almost 150K in equity. Actually, yeah, more like 100K in equity a year after buying the house. That's pretty wild. But I didn't know. I was absolutely convinced that the interest rate situation was going to get worse, which it did. So I said, even if this place goes down by 100K, the payment's not going to go down. And I don't think that necessarily people should shop payments, but when you're talking about a situation where I didn't have to put any money down, or you're putting a very little amount of money down, and you're just going from renting to paying a payment, it matters. How much you're paying per month absolutely matters. And in a lot of ways, it matters more than what you're paying overall, depending on what you're doing with your extra money in the meantime. Like everyone focuses on, you're going to pay this much over the course of the loan. Doesn't matter too much depending on what you're doing with the savings if the payment's less. If you're just wasting the savings, then it matters, but if you're investing them, you'll come out ahead. But the interest rate is what's important for how much you're paying every month, and that's what most people, for better or worse, whether they should be or shouldn't, are shopping payments. And so higher interest rates is naturally going to drive down prices. What a lot of people are pointing out, though, is that they're like the locked-in effect of people like me, but usually older people, boomers or whatever, who've been in their homes for years, would potentially be people who are willing to put their homes on the market because of these crazy prices and go move somewhere else. You have to be able to go somewhere a lot cheaper to keep your monthly payment the same when interest rates are 3 or 4 times for a new house what your current loan is. If you have a 2.5% loan like me, or even 3%, whatever, if you sell that place, you got to go buy a place that is now at 6, 7, 8, 9% interest rate, which is mean that you're going to have the same monthly payment, you're going to have a lot lower house price. So that's pushing prices down, the interest rates, but they think that a lot of people aren't going to be coming onto the market because they're locked in or whatever. And that's kind of true, but I think there's a couple things at play here. And the main factor, I think, is that just the human nature of what do we see in every time there is an economic crisis, and every time there's an economic, or at least on paper, market boom, is logically, you would think, prices are low, I'm not going to sell now. Prices are high, I'm going to sell then. But is that what we see from the masses? Is that what we see from the average people out there? No, we see people getting in on the mania, and the reason prices do rise so much is because everyone starts buying, hoping that they're going to continue to rise. And then the people who wait and say, oh, it's too high, they see it go up, and I should have bought then. So then they buy at an even worse time. And you have everyone buying when prices go up and everyone selling when prices go down, especially, you have that mania effect works both ways. The panic, oh my God, what if they go down even more? I should have sold last month. Now it's even cheaper. If I wait another month, it's going to go down even more. Add into that the fact that prices are going to be going down because everything is going wrong in the markets. Everything is going wrong in the currency. All sorts of people are going to be losing their job, despite what big banks out here predicting a 0 unemployment recession. That's insane. I just saw that. So you have someone claiming, let me see if I can find the tweet. Yeah, BlackRock, the world's largest money manager overseeing $9 trillion in assets, said that we could be headed for a full employment recession. The economy contracts, but everyone still has their jobs. How does that work? Describe to me what a contracting economy is. We have asset prices falling, revenues falling, it's contracting, lending is falling, the money, all that stuff is contracting, but no companies have to do layoffs. All their assets, all their revenues, and thus their profits are contracting, and no one does layoffs. No one switches to AI and computerized stuff to save money. Everyone can just pay their employees the same, even though everything in the economy is contracting. Nonsense. We're not going to have a full employment recession. We're going to have unemployment go up a lot. And we're already seeing personal debt at equal to the max that it's ever been, horrible amounts of credit card debt, and people haven't even started really losing their jobs yet on a wide scale. We still do have low unemployment, and people are already just on razor's edge when it comes to their personal finances of having to borrow for simple things. Like I've mentioned in my last video, the prices at the grocery store are just going berserk. People are borrowing for necessities, and they haven't even lost their jobs yet. What's going to happen when those people do lose their jobs and the banks stop lending? And what do you think is going to happen to the economy then? And what's going to happen to the housing prices? And then you add into that the panic / mania factor, people selling on the way down, people bunching up together. And here's another thing that people, I don't think, talk about often enough, is what percentage of all these homes out there are owned as investments. So I looked up, I think something like almost 25%, a full quarter of the residential real estate in the United States is owned by investment companies like BlackRock. And another few million houses, it's a small percentage, something like 1.5%, almost 2%, are Airbnb houses. So these are owned by investment. Some of those overlap, but then there's a lot of other people who own these as investment properties, exclusively owning it on the float, basically, on the cash flow basis. So they don't have enough money to maintain these mortgages on these 2 or 3 Airbnb houses that they have if people stop renting them out because they're broke, because they lost a job, because they had to spend $100 on 2 bags of groceries. So these people are going to start listing those for sale, even though they don't want to because the prices are low. They can't afford the mortgage when no one is renting the place out. They can't afford their beach house in San Diego when no one's renting it for $700 a night or whatever. So those are going to have to get dumped in the market too at fire sale prices. And because the interest rates are so high, people aren't going to be able to buy them for the same price because their payments will be so high, so that'll push the prices down even more. And then that feeds into this mania like I'm talking about. And just like I said, the human nature is not that, oh, prices are low, I'm not going to sell. That's never been the way it is. It's people sell when the prices are dropping because they're scared, and they buy when the prices are rising because they're greedy. And that's why you should be fearful when others are greedy and greedy when others are fearful. Everyone should be buying when things are going down and selling when things are going up, but that's just never the way it works at a population level. And all these companies like BlackRock, so many of these major investment companies are not going to be wanting to take losses and sit there with empty houses. They're going to unload these stuff off their balance sheets too, just to get it off the books. And because they don't want liabilities, they want assets. And empty houses sitting there that have carrying costs, that have mortgages associated with them, those are going to want to be dumped as well. So we're going to see a lot of crazy stuff with housing, and prices are definitely going to go down. And so if you're looking to buy, I'm not a financial advisor, but I've been correct on a lot of this stuff before. So it's just my opinion that if I were looking to buy right now, the situation is I would, if you're already willing to get a high interest mortgage, that's not going to change anytime soon. But what is going to change is the prices are going to go way down. So I would start stacking that cash if this was something I was looking at, and wait for the prices to go down, which I think absolutely we will see a major housing price drop within the next 18 months to 2 years. And I think we're going to see a major market correction as well. I've always said for years on this channel that before we see the final death of the currency and then melt up inflation or just pivot to another form of currency, we're going to see some sort of overall economic crash. severe contraction before that, because then that's going to be the last bullet that they have is to turn on the printing presses, because the only alternative is to let the whole monetary system die, which is dying anyway, but they're just never going to let that happen. So it's very interesting that we're going to be put in that situation, and there's just zero chance in my mind that people just sit on their houses and don't sell when everything is collapsing around them. Because a lot of these people, so many of the so-called millionaires and the wealthy boomers, a lot of that is tied up in their houses. And the rest of it's tied up in stocks and bonds and all the other stuff that's going to collapse. So few people have money in things that are going to be going up in this time. Like true wealth that comes out of the earth. Like this awesome silver round from MK Bars. And commodities and things like that. So I even think that a lot of this is going to get pulled down initially within that contraction, where people just pay. And this goes right back to what I was saying about people hopping on the manias, and why people, well, it being a stupid idea to think that people aren't going to sell just because it would be a bad time to sell on paper, is the mania, and they need the money because everything else is going down. When everything in your life is going down, you have to sell something off. And the stuff that you don't really need, like the TVs and all the luxury goods and stuff, that stuff no one's going to be buying because no one has any money. So the only thing that you're going to be able to sell is the thing that at least somebody needs, but they don't have any money either, so they're not going to be able to pay good prices, except for the people that have something in real wealth. But initially, even that stuff, when everyone panics and gets out of everything, you always see everything get dragged down initially. And this would probably strengthen the dollar and other different types of actual cash very briefly as people just get into it and don't know what to do. But then it's going to become very clear very quickly where the actual, resource wealth is, and that's in resources. And this is one of the reasons, not to continue on some weird rant, totally off topic, it is on topic, is that why China, I think, is in such a good position to just really put us in a bad spot, is that they soak up resources. They've been soaking up resources. And yeah, of course, when there's a huge global economic contraction, collapse, they're going to feel it too. It's going to be impossible for anyone in the world to not feel it when the entire economic and financial status quo is just crumpled up and imploded. But there's always a need for resources. That's what the entire financial system is based on. I remember back in the day when you would look at an economics textbook in the early 90s to mid 90s, even dictionaries, the first definition I remember of ever seeing for economics was economics is the study of the allocation of the earth's scarce resources. And now they have all sorts of other nonsense. Let me look up the dictionary right now. The branch of knowledge concerned with the production, consumption, and transfer of wealth. A little bit better. Depends on what you mean by wealth. Let's check the 60s. That you got to get yourself one of these because they literally changed the definition of words. Let's look up economics. Get my Kents on, my Clark Kents, and we're going to look up my massive tome. I have too much shit in the way I can't even read on it. Where's my E? C, D, E. You know there's kids out there who have never learned how to look up something in a dictionary, put things in alphabetical order. E, A, E, C, H. Ecumenical economy. All right, the science of the useful application of the wealth or material resources of a country. So, little bit that they add in there. They added material resources, which we know obviously are limited. Now, in a universal sense, in the universe at large, resources are so vast to the point that they're, practically speaking, unlimited, but we don't have access to that. So resources are very limited when it comes to what we need and can use on Earth. And specifically, certain resources are very limited to certain areas of the planet and people who have been bothering to collect them. And you can do all you want with hypothecation, reverse hypothecation, and assets based on other loans and derivatives, but all of that, at least originally, people have gotten lost now and focused on the asset itself. all of that is originally based on first order wealth, real resources that you need. You could give someone on a desert planet all of the financial instruments in the world and they will still die of thirst. They still will not be able to build a single hut or make a single brick or make a single battery or engine or piece of clothing or anything, and they will die. And the only thing that all these financial instruments are ever designed to do originally is to be representations of actual wealth. But people have become so just misguided, they've lost that understanding that this stuff is actually supposed to be representative. And now it's just so complicated that people just think that these are wealth in and of themselves when they're really not, because you can't do anything with that. And China has been soaking up actual resources. Here's an article on Zero Hedge. They're, tend to be a little bit hyperbolic sometimes, but they, a lot of times the actual data in terms of graphs and charts is legit. And this article says China dependency is bigger than you think. China's mineral dominance. We're talking about all these little like trace minerals, rare earth minerals, stuff that no one needs a lot of. It's not necessarily super expensive, but they are very limited in terms of where they're being mined, how they're being mined, who has them. And things like gallium, China has like 90% of the entire world supply, maybe even 95%. Germanium, because it's just a chart, I'll put the picture up on here. So germanium, same thing. Bismuth, they've got like 3/4. Tellurium, more than half. Indium, more than half. Cadmium, about 1/3. Selenium, about 1/3. And we're talking about one country who we're at economic odds with and who we know are probably almost certainly, in my mind, gearing up to become a direct conflict with us, have like half of the entire world supply of these critical materials and minerals. And just like we saw with India and rice, one of these countries decides to shut stuff off, we're going to feel these effects. And we have been, relying on the fact that we have mastered the creation and use and sale of all these financial instruments, but we've just let go of all the actual stuff that it represents. And that's going to come back to bite us in the ass. And yes, we have been slowly building up our productive capacity, but it's not quick enough. And we're never going to be able to compete when we subject ourselves to all these sustainability and pollution restrictions, which I think we should. Obviously, I don't think we should destroy our country with pollution and all that stuff, but China doesn't feel that way. So yeah, long term, that's going to be bad news for them. But it's bad news for the rest of the world too. We're all having to deal with these effects, and meanwhile we're chewing on a soggy paper straw while India and China and Southeast Asia are dumping the equivalent of like barges worth of plastic and trash into the ocean every single day, while we're over here worrying about whether we have a plastic straw or not. So we can't compete in that sense. And so they realize that real resources are what they should have. They're stocking it up, and that's why productive capacity is playing such a huge role in the Russian-Ukraine conflict. It played a massive role in World War II. That's why we were able to be so successful. The Allies and the United States specifically is because of our massive productive capacity, and we are behind now. China's naval capacity of shipbuilding is like 200 times the US. So everyone focuses on like, what if our Navy went to war with theirs right now? Yeah, our US Navy would win. We would take some severe losses as well, but they can replace their entire Navy multiple times a year with their productive capacity. It would take us multiple years. So who do you think is going to win that exchange? We have certain like nuclear submarine parts and massive ship parts that are made at a single facility in Newport News, like one place. And you don't think they're going to start to try to sabotage that stuff? So I've really gone off topic here, but the bottom line is there's a lot of forces at play. Housing prices are certainly going to go down, and it's not financial advice. It's just my magic crystal ball gazing into the future. So what can you do about it? Like I said, try to stack wealth. Some of that would be cash, in my opinion, but to take advantage of these things. But you need to be ready to pivot, because I think cash will be overly valuable for a very short period of time, and then as people realize that what it represents, nothing, that they will move to other things. So it'll be interesting to see how this plays out, especially with this new BRICS currency. coming into play within the next month or two. It'll be weird to see what the specifics are of that, but try to get first order wealth. Minerals, land, fuel, food, just things, actual things. So let me know what you guys think. Thanks for watching, guys, and I will talk to you soon.